episode of Always Up to Date. I'm Denise and this is Yahweh, and we are co-owners of Always Bookkeeping. So we're glad to be here today, and we're going to talk about rental income and expenses. But before we do that, we're just going to mention again about our business boot camp coming up on Saturday, November 23rd. It's from 8 in the morning till 5 in the evening. And it's at West Edmonton Mall this time. If you are a business owner, if you have a small business, if you are thinking of starting a small business and just don't know where to start, we would highly recommend you come to this boot camp. It's $20, and there's so much information that you'll get from this boot camp. You'll get to just kind of hang out with other entrepreneurs. The people that are speaking, Yahweh and I will be speaking at it, as well as other entrepreneurs. They're all people that own businesses at this time. They've been doing the same things that we're telling you to do in your business. We're taking the same advice and trying to build our businesses as well. So it's not somebody that just has a business degree that thinks that they know what they're talking about. We actually have experience. Everybody that's speaking will have experience in their field, but just as a business owner, and just kind of the struggles they go through, the things that they've learned, and everything that we talk about, we've tried it in our practice and we find that it works. And so we want to give you that information. Our goal is to help your business grow and to succeed. And so we would love to see you come out. Again, $20 for so much information is just amazing. So if you're not doing anything on Saturday, November 23rd, just feel free to contact us and we can set you up with a ticket. Or you can go to Eventbrite and just look up Business Boot Camp. It's being put on by Spurl and Associates, Chartered Professional Accountants, but you can find it there. So we hope to see you there.
Awesome.
Yeah. So like I said, today we're going to be talking about rental income and expenses. And our quote is from Henry Ford, who's the founder of the Ford Motor Company. And his quote is, "If everyone is moving forward together, then success takes care of itself." And our statistic is again from the Fraser Institute. The average Canadian pays 43% of income taxes. So the tax, CPP, EI, GST, fuel tax, those kinds of things. And by comparison, on average, only 37% of the remaining income goes towards basic necessities like shelter, food, and clothing. So we have John Smith comes in again. He likes to come to our office and help get our advice on his taxes. So today he came in and he had bought a house and he's going to rent it out. And he's wondering, what, if anything, he needs to report on his personal tax return. So we have some questions about that and how we can help you and John Smith to fill out your taxes properly regarding your rental income.
Absolutely. So first one, do I have to report my rental income on my personal tax return?
Yeah, absolutely. The CRA sees that rental income as income, and they want to know what the net income is from your rental. And just we're going to mostly talk about like a property that you have that is specifically for rental. But these also, if you just rent a room in your house, you can also claim that as well. So you can, you have to report the rental income, but you can also claim expenses as well. And so that's kind of what we're going to talk about, is a lot of the expenses that you can claim that relates to your rental.
For sure. Is my rental income business income?
So it's kind of tricky. If you're just renting if you have a house and you're just renting it out, or you're just renting a room in your house, it's just considered rental income. The CRA considers it rental income. But if you have, say, a condo that you rent maybe to, like an executive condo that you rent to another business, and they come in and maybe rent it for a week at a time, and you do the house cleaning for it, you provide them meals, you do other services as well while they're renting it, then the CRA might look at that as business income instead of just rental income. And so in that case, you would have to fill out a T2125 on your personal tax returns.
Yeah, I guess it depends on engagement
That's right.
to the rental property.
Yeah.
Yeah. Can I deduct advertising on a rental property?
Yeah, so advertising, so you can claim as an expense any advertising in a Canadian newspaper, TV, or radio, anything like that. So I think probably like social media would work as well. Anything where you put up a posting for your rental property. You can also claim a finder's fee. So if you hire somebody to find somebody to rent your property, you can claim that as an expense as well.
Mm-hmm. Can I deduct insurance on a rental property?
Yeah, so any insurance that you pay for that rental property, you can claim the expense of the premiums on that rental property, but only for the current year. So if you have an insurance policy that covers more than 1 year, only claim the amount for that particular year, and then the rest of it will be claimed on the following year.
Can I deduct management and admin fees?
Yeah, so management and administration fees can also be claimed as an expense. These would be fees that are paid to a person or a company that manage your property. They're going to be amounts that are paid to agents who collect the rent or find new tenants for you. Any of that kind of thing, you can claim those expenses.
Awesome. Can I deduct office expenses?
Yeah, so you can deduct some office expenses, things, just small items like stationery, so pens and pencils, paper, things like that. You cannot claim capital expenditures, so like chairs, desks, filing cabinets. I was reading something that said you can't claim calculators. I didn't realize the calculator would be a capital expenditure, but that's what the article said I was reading. So you kind of have to be careful, but just the small stationary items you can definitely claim as office expenses.
I guess good rule of thumb is that if they last you for more than a year, then you can't claim it.
Yeah, good. That's a good way to look at it.
Can I deduct property taxes?
Yeah, again, you can deduct the property taxes on the property that you're renting out. Again, it's for the period that your property was available for rent. Yep.
Okay. Can I deduct repairs and maintenance?
Yeah, so definitely you can deduct repairs and maintenance. You can deduct the cost of labor and materials for any minor repairs. But just a note that you can't deduct the value of your own labor. So if you can you can deduct the materials, but if you do the work yourself, you can't deduct that. But if you hire somebody like a maintenance person or a custodian or even a company to do the maintenance, that part you can claim. Yeah, and also just another note, you can't deduct costs that are capital in nature. So again, any big repairs that are capital, you can't do, but you can claim a capital cost allowance on your property, and that might be another video that we deal with on capital cost allowance. But
yeah.
So then just another note, you can also deduct salaries and wages and benefits for like superintendents or maintenance personnel, anybody that you maybe hire on an ongoing basis and you're paying them as an employee almost, like a salary or wages. You can claim that, but there again, you can't claim yourself. So if you pay yourself a fee to manage your building, you can't claim that as an expense.
I see. And we have to be careful about using repairs and maintenance, because I know a lot of us thinks of improvements as repairs and maintenance as well. If it extends the life of the rental property, it doesn't count as a repairs and maintenance. It gets added to the value of your building, which you can still claim those additions through capital cost allowance, but again, they're not part of repairs and maintenance.
Yeah, that's right.
Can I deduct travel expenses?
Yeah, so this is kind of interesting. You can claim travel expenses incur to collect rent, if you have to supervise repairs, or if you have to manage the property. You can claim the travel it took you to get from where you live to that property, but you cannot claim boarding or lodging. So the meals that you have, if you have to stay in a hotel overnight, you can't claim those. You can only claim the mileage to actually get there, and the gas probably.
Yeah. Can I deduct utilities?
Utilities. So yeah, you can deduct your gas, oil, electricity, cable, water, those kinds of things, but only if your rental agreement specifies that you're paying for those utilities. So if your renter pays for those, you can't claim them. So those are the things. And I just wanted to say again, like we talked about at the beginning, these are mostly for if you have a building or a property that you're renting solely for the purpose of renting it. If you're renting just a room in your house and you're living there as well, we recommend that all of those things that we talked about can still be claimed as expenses, but we would recommend doing a percentage, maybe 1/3 or 25%, somewhere in there. You don't want to go for sure over 50%. You don't want to do 50% or more as a rental, because then you lose your principal residence deduction. That's right. And so it's really important to remember, if you're just renting out a space in your house, you can still use it as rental property, but you want to just make sure that you're not over claiming your expenses, because you don't want to get an audit.
Yeah, absolutely. Yeah. Well, I hope you guys find that very informative. If you have anything in mind that you want us to talk about, please comment down below, and please don't forget to like and subscribe to our videos, and we'll see you guys next time at our next episode on Always Up to Date.